Hello everyone and welcome to today's morning report chart analysis videos on Thursday the 29th of September with me, Richard Payne, market analyst at Asset Markets. The big news overnight has been that OPEC has come to an agreement to cut production. This is the first production cut from OPEC since, well, for 8 years, and it is an agreement to cut production from sort of the current levels of around 33.2 odd million barrels per day back down to 32.5 to 33 million barrels. Now this is surprising that the market was not really factoring in the prospect of a production cut. They were sceptical about whether a freeze could be possible, but certainly that has helped to drive the oil price higher as the initial response. We saw crude up 5-6% yesterday, WTI and Brent both strongly higher. Now you can see on these charts that does it actually do a great deal? Well, the initial reaction was obviously strong, but today we've started to see the market falling back a little bit, so around about sort of between 0.25% and 0.5% lower, depending on which contract you trade. Now, is this because that the market is sceptical? And I think it could be the fact that yes, you've had some fantastic words out of OPEC saying, yeah, we're going to cut production, but now they've actually got to deliver. And the sort of process of delivering production cuts is going to be difficult because no one's going to really want to keep to those production cuts. Exactly how Iran is treated in this, considering it continues to try and move towards 4 million barrels a day, it doesn't actually do a great deal. You could argue Russia's not involved in this production cut. It's just an OPEC-wide agreement. In fact, the sort of practicality of the matter is that these OPEC countries are still all vying for market share, and the sort of temptation to break the agreement will be quite high, I think, and in fact the practicalities of it may well be harder than just coming to the verbal agreement. So I think it's all still yet to play out, and you've got an OPEC meeting at the end of November 30th, to really sort of find out what the countries are going to do, but ultimately going forward, will it actually do a great deal? Now that's possibly why the price is back lower again today after the initial euphoria of last night's deal. However, having said that, we've still got a move on markets that is improved risk sentiment. So you're seeing treasury yields higher on the 2-year and also the 10-year today. You're also seeing the dollar, which is interestingly sort of gained a little bit of ground yesterday, but although it's given back some today, the main move has become in the yen. The yen has been strongly sold off overnight, and it continues to remain so, down sort of 80 ticks against the dollar. Now the other interesting move is the fact that the commodity currencies initially obviously benefited from the news, as certainly the loonie, the Canadian dollar, certainly benefited from it, but they're all giving back those gains, or some of those gains today, as the oil prices just started to drop away again. So it certainly looks as though oil is sort of driving these market moves at the moment, but the interesting fact is that the oil price is mildly lower today, as the market has woken up with a little bit more skepticism perhaps today. So sorry, get that back up the slide. So in terms of what we're looking out for today, well, we've got a little bit of inflation data for Germany. We've got final GDP data for Q2 on for the US, and also weekly jobless claims. Let me show you. So we've had initially the German unemployment data basically the same, pretty much in line with expectations, not too much different. But the market will sort of be now looking towards German inflation this morning. German inflation is expected to pick up slightly from the 0.4% that was announced last month, and that would be gaining traction. That would be the highest since, if it came out the expectations, highest since 0.7% back in May 2015. So could that be a suggestion that the Eurozone is starting to pick up in terms of inflation? Well, the inflation data for the Eurozone is announced tomorrow, so that will take on extra interest if 0.6% is achieved. Throughout the afternoon, then you've got the US data that comes out, and you've got weekly jobless claims at 1:30, 260,000, again pretty much in line with where we've been throughout the last few weeks, sort of interesting in terms of the jobless claims. But the final GDP data for the US is expected to be mildly upwardly revised to 1.3%. But again, that's not exactly shooting the lights out, is it? That's an annualised number as well. So GDP in the States is still not all that great, and that's that final data for Q2 is expected to confirm that today. So that's what we've got to report today. In terms of my charts today, Euro Sterling. Now, I spoke to you yesterday about the fact that Sterling was beginning to sort of turn around on some of these charts, and Euro Yen is especially one that the Sterling is starting to gain ground on, especially given the overnight moves on the yen, which has been sold off. But Euro Sterling is an interesting one because it has now tested the uptrend channel throughout yesterday, and it's now continuing to test that. Looks like it's breaking that trend channel. Look at these stochastics, a confirmed sell signal. Look at the last 3 times we've had a sell signal on stochastics: in June, July, and August. June sell off. July near-term sell-off, but August was the big one, the corrective move. So could it be that we're breaking down below this uptrend channel, and we could now be entering into more of a corrective phase? Because the MACD lines have certainly not been all that great in that rally higher, have they? You'd want the MACD lines to be much stronger if this was a really positive bull move in this uptrend channel. It seems to be sort of breaking down, as I said. Here we see the hourly chart, where the 144-hour moving average, this black line here, was supported throughout the trend channel higher, but that's now turning lower. You've now broken below that and is now flattening off. You see the momentum indicators, positive configuration on the MACD lines throughout the trend line, but now having sort of broken below the trend, you're seeing more of a corrective outlook. You're seeing the MACD lines, the hourly RSI failing around 60. Moving towards 30, having previously found support throughout the trend around that 40 level. So these are all sort of deteriorating momentum signals, aren't they? And it looks like we are rolling over on the Euro Sterling. So zooming in, you'd look for certainly a retest of yesterday's low of 85.85. If you see a move below that, that's 85.60 being tested, which is your first real key reaction low within the uptrend channel. If you break through 85.60, you're sort of then looking into far more of a corrective outlook, and you'd start to think about trend supports lower down. There's obviously this key level around 84.90, which is an old breakout, became supportive. So 84.90 is your next key level below that. So you could start to see a corrective move on Euro Sterling, which would suggest the euro underperforming sterling, and it'll be interesting to see how this one does pan out. In terms of your sort of upside moves to improve the outlook once more on Euro Sterling, you'd say 86.40, which is, if I get the crosshair, a pretty decent pivot line as well. 86.40 on Euro Sterling. Provide the lows here and on Friday last week and Monday and Tuesday, and then a reaction high yesterday. So that is clearly a market a level the market is looking out for. And then a move back above 86.93 would sort of re-engage the bulls. But certainly it looks like this one is slowing in its trend channel and possibly breaking lower. But I wish you good luck in your trading today on Euro Sterling, and I will speak to you later.